and welcome to KYC, a brand new show at NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. KYC, Know Your Company, is a show designed to give you regular investors powerful, actionable insights into the fundamentals of every listed company every day. And today we have with us Tata Power, which remains in focus at the moment. Now, Tata Power, of course, as we all know, is, well, rather it's started its journey as a power generator. But, through the course of the many decades, what it has also done is, well, pivoted towards, I would say, not just, distribution, but of late, over the last few years, we're also looking at the company, venturing into, well, renewables as well. So let's take a look at what it actually does. So, of course, it's in the business of generation, transmission, and distribution. Moving on, it also aims to produce power completely via the renewables future. And, moving on, of course, all the focus remains on renewables with respect to what the company wants to do. But as far as its current capacity is concerned, well, thermal is the major one, but we're seeing a significant ramp up as far as the solar capacity is concerned as well, coming in second in that list at around 4,000 megawatts, about a little over 4 gigawatts. And, they're also, in fact, into waste heat recovery. So that's as far as, your overall generation portfolio is concerned. But in every show, what we try to do is we try to rate these companies based on a handful of parameters with respect to what this company has done. And among these, what we are considering is the income statement, of course, the kind of growth that the company has seen over the past few years. We talk about the latest balance sheet. We also compare and consider the return ratios naturally as a consequence of the income and the balance sheet, and of course, cash flows. Among other factors, what we're also considering is shareholding and street cred, how the company has done in terms of its share price action as well as dividend payment, and not to forget what the street is making of Tata Power. I reckon that for us was a better parameter as compared to price to earnings or any other valuation metric, because it's always subjective, and we thought that the street view would be better. But to take us through all of this, well, I am also now with Mika, who's going to, well, join us to give us more insights in as well as help us with the ratings of the company. Mika, thanks for joining in. Let's start off with the income statement.
Yeah.
What are you noticing here?
So revenue of FY24 stood over 61,000 crores, EBITDA stood over 12,000 crores, and net profit almost 4,200 crores. When you look at the 3-year CAGR, which is the compounded annual growth rate, revenue and EBITDA in the range of 20 to 25%, while net profit has seen a strong over 35% growth, and this is a thumbs up because it's seen consistent growth over the past few years, and the income statement looks good as of now, Agam.
Talking about the balance sheet too, it's not unhealthy. That's something I can certainly tell you, but it does have a very large gross debt. But we must remember that the company is working with a significant amount of large working capital requirements, which means its short-term debt is also significantly large. That said, it does have a net worth of around 34,000 crores. And it has very healthy cash flow generation as well, something that I'll talk about as well. So at least as far as the balance sheet is concerned, at the moment, its gross debt stands at around 54,000 crores, which is a little less than 2 times its net worth. But do remember, the cash on books at the moment is also a little over 9,200 crores. So it's fairly healthy. The only reason why I would give it a neutral rating is because of the fact that the debt is a tad bit higher, because of which they do incur substantial, interest costs. But save for that, well, largely given the kind of operation that it runs, it's not a terribly bad balance sheet, which is why I would give it a neutral rating. But what about return ratios, Mika?
So we've seen an uptick over, since 2021 to 2024. Return on equity in 2021 stood at around 5.4%, while return on capital employed stood at around 5.9%. But there's been volatility, there's been a steady rate of growth, but in 2024, return on equity did see somewhat of a correction to 12.1%. It has moderated, and even the uptick in the return of capital employed is barely, 0.2%. So it's a neutral rating in terms of ratios, because while they have seen some improvement over the past years, FY24 is where they saw some moderation to little to no growth. So it's a neutral rating on the return ratios. But Agam, how do cash flows look like?
Not too bad a picture out there, because we are certainly looking at an improvement here, at least in terms of cash flows from operations. And there's been an uptick there as well. Nearly 6,000 crores cash generated from operations itself. Even on a net basis, 2,400 odd crores. I know that number is a tad bit lower than what we've seen in the first half of FY24, but we must remember that this is also on account of several changes, and this is just the first half. So I'm not necessarily gonna put any negatives here. It's a thumbs up as far as cash flows are concerned. But overall, shareholder rating is the other thing that I'm going to consider as well. So it's a well-held company, but the promoter holding firstly stands at around 47%. That hasn't changed over the years. What has, however, changed quarter to quarter is a reduction in the institutional holding for the company and an increase in the retail holding. So perhaps based on all these parameters and the fact that the promoter holding is also less than 50% at the moment, I would give it a neutral rating and nothing more than that. What's the kind of performance that the share price has seen, Mihika?
Yeah. The performance of the stock has been good. 5-year share performance, 720%. That's like an 8 times growth. And 1-year share performance has also not been too bad. It's up 36% in terms of the 1-year share performance, and it continues to do well. We've also seen some kind of uptick today. So it's a thumbs up rating on this part. The next part I want to talk about is dividends. Now, FY24 dividend payout ratio stood at 17.29 versus 19.16 in FY23. So there has been a decline, and it's actually very it's a key thing to be noted that the company's dividend payout ratio, as per data, has been declining since FY21. And around FY21, it stood at around 45. Right now, it's as of FY24, it's at 17.29. So it's a thumbs down on this parameter because the dividend payout has been declining over the past several years. Lastly, Agam, what does the street say? What are the analyst recommendations on the counter?
Well, so Mihika, overall, when it comes to the number of buys, there's certainly a lot more. In fact, more than the holds and sells taken together. So you have about 14 buys, 4 holds, and about 8 sells. But the potential upside is largely nothing at all. Practically nothing, just about 2% uptick, which is as good as being flat. So that perhaps is the key takeaway, which also gives you an idea about whether or not this particular share price at which Tata Power is trading at is fully valued or no. This is, of course, one partial way to consider it. But for now, I would also give this a neutral rating. So if we actually do consider all the parameters that we've spoken about, so we have the income statement, we have the balance sheet check, return ratios, cash flows. Even in the next set of parameters, we have the shareholding pattern, the street cred, dividend payment, and street coverage. If you total all these thumbs, well, what you will get is a score of 5 out of 8, which isn't too bad, but it certainly could be better. So that's as far as the NDTV profit for rating for Tata Power's performance so far is concerned. But let's move on and talk about the strengths, weaknesses, opportunities, and threats. Mika, I take away the strengths and weaknesses here.
Yeah, I'll start off with the strengths. It has a diverse portfolio in terms of what it does. It has transmission and distribution. It's also power generation. In terms of power generation, also there has been a diversification of portfolio from thermal to more focus on renewable energy. It also has an extensive distribution network, and this is a very significant revenue generator as well, because when you talk about power generation, the tariffs are fixed as per PPA, and the power demand keeps on being volatile. It also has a strong capacity pipeline, which provides the company with long-term visibility as it adds new capacity additions every year. And it also as well has a strong brand reputation and a proven track record of execution. So that stands good for the company. In terms of weakness, well, it has high capex requirements, which we'll get into detail a little later. But these high capex requirements is expected to keep their debt levels high, and we've seen debt levels increasing on a year-on-year basis. The power sector is also heavily regulated, so there are certain times of regulatory and environmental concerns, and they are dependent on fuel imports, which tend to be very volatile in nature. So that's where weaknesses are concerned for Tata Power. But Agam, in terms of opportunities as well as risk, how does the picture look there?
You know, clearly it's going to be renewables, right? And it goes without saying, because the last 5 years is where the company has been focusing on, and the opportunity in the solar rooftop, that is again something that's come through over the last 2 to 3 years, and you know, Tata Power has continued to focus there as well. There is also potential in the pumped energy storage projects. That is something that should be being talked about this year itself, and it does seem like Tata Power has taken that baton and moved forward as well. In terms of risks, of course, there'll be delay in project execution. There is also a considerable reliance on import of coal and other fuels. That's something that will eventually come off as the portfolio pivots more to renewables, and of course intense competition in the renewable space as well. So these are something that a lot of these factors are where the Tata Power will have to grapple with. But let's take this conversation forward with an analyst here. We have Rupesh Sankhe, he's the Vice President of Research at Elara Capital, who joins us on the show. Rupesh, good afternoon. Thanks for joining in. How are you rating Tata Power at the moment? What's your view in keeping in mind the rest of the sector?
Good morning. Definitely, their plan of incurring 1.46 trillion kind of a capex for next 5 years seems to be very ambitious. No doubt, next 5 years we'll see significant capacity addition or capex on the solar cells, as well as RE capacity addition, pump hydro storage, the projects in the Bhutan. That will have a lot of capex going ahead as versus earlier 4-5 years capex. So definitely it's a 2.5x more than what they have incurred in the last 5 years. But the thing is that here to note down that they have shown significant operating cash flow in the last 2 years, because of Section 11, the entire fuel cost pass is there on the Mundra side, as well as their solar EPC is doing good. Other verticals are doing good. So the operating cash flow is very strong to support this kind of a capex. And no doubt, the opportunity is there for all the players in the renewable space. And because of new FDRE tenders, they will get benefit of their own solar EPC, solar sales, solar modules manufacturing. So they are completely integrated players, and that advantage they will have. And once hydro storage comes in picture, I think they will be in a competitive position to gain a higher market share in the renewable energy tenders. And that is why we are very positive on the stocks, because of strong operating cash flows as well as the opportunities there in the FDRE front. So definitely, I think capex looks very, very ambitious, but they can achieve this target if they go aggressive on the FDRE front and they maintain their capex on the pump hydro storage. So overall, in terms of valuation also, stock is better as compared to other private players. So they are trading at close to 25 times PE multiple, 11 times EV/EBITDA seems to be attractive. Again, there is a value unlocking possibilities there once they start thinking on the IPO on the renewable energy side. So there is a lot of value unlocking is there. So from that perspective, I think company is well positioned, and valuation also looks attractive at this value at this current market price.
Right, Rupesh. I just want your view on risks to your thesis. So naturally, we're expecting cash flows to remain where they are right now, and that's in the the positive territory. But should there be some issues, the capex plans also come into peril. Maybe they will get a bit delayed. Besides that, there are also several other factors that could come in the way of execution of the various projects they're in. What are the risks from your end that you're anticipating or envisaging in the way you're looking at the company?
Definitely some risks are there in terms of execution. So whatever the timeline they have set out by 2030 looks very, very aggressive. There could be 1 or 2 years kind of a delay. Again, the tenders that they have for the FDRE tenders, they have to be very aggressive there. So winning tenders as well as keeping track on the under construction projects is going to be challenges for them. As well as in terms of entire sector, if there is a value multiple is coming down from the current level. So all these companies are trading at significantly premium to their historical average. So if that valuation comes down for the entire sector, then there is a risk in terms of value multiple de-rating also. So challenges are there, but the opportunity size also very big. So they have to be on track on pump hydro storage, RE capacity addition. Otherwise, strong operating cash flow will remain there in the balance sheet only without giving growth for the entire portfolio. So those risks are there. The overall industry risk is there. In terms of evacuation, I think Ministry of Power is now coming out a lot of resolution policy changes to evacuation of RE and integration of RE. So slowing down RE tendering, going slow on the pump hydro storage, and the value de-rating for the entire sector can be a risk for the company.
Okay, all right. Rupesh, thank you so much for joining us and taking us through your view on Tata Power. A very important and insightful one as well. But with that, let's talk about the growth drivers as something that Rupesh has also spoken about. Nika, in terms of the future, it's going to be largely renewable.
Yeah, the Tata Power is betting very big on renewables. You can see it in all of the forward statements that they've been making. Currently, the operational capacity is at 6.7 gigawatts, but they do have 10.1 gigawatts of renewable capacity under construction, and they have said that renewables will be 60% of their total capacity post all the projects have been completed. And they aim for 15 gigawatts and 23 gigawatts renewable capacity by FY27 and FY30. And even in terms of FY30 targets, they do estimate renewables to be over 50% of their total EBITDA and net profit. Second part is the solar business segments. The EPC order book stands over 680 crores, revenues at over 430 crores as of Q2. And the solar utility EPC segment, which is the company's own group captive projects as well as third-party projects from NTPC, NHPC, SJVN and NLC. So the order book over there stands higher at over 15,000 crores, but most of it is the company's own power plants, and revenue stood at 1,800 crores. So the company is expecting more revenues from these segments as they execute their orders, pending orders, and get more orders in the future. But Agam, transmission and distribution is also something which is key to talk about.
Absolutely, one of the more important ones as well, even beyond generation. So when it comes to T&D specifically, we do know that they have a considerable amount of exposure to the Odisha, discoms. In fact, they own, or rather they operate a lot of those companies. And we've seen an improvement in the AT&C losses over the last, few quarters. Also, in terms of pump storage and hydro power plants, that's something that a lot of companies and the entire sector has been talking about of late. Well, Tata Power has also picked up the baton there. And in fact, we're looking at and construction of about 2,800 megawatts pump storage projects in 2024. So that's going to be the other big one to keep an eye on. But, this is what we're watching out for as far as, the company overall is concerned. And on that note, I'm going to also thank Mihika for joining us and giving us that insight into the Tata Power, its plans on the annual, as well as what it has in store. But in an exclusive conversation with, in fact, Mihika, the CEO and MD, Praveer Sinha, talks about what are their plans in the new plant. Listen in.
Our target is that we will have 10 to 11 megawatt of module production every day, and similarly in our cell also similar range. We should have about 97% of yield from these plants, and efficiency of the cell should be in the range of 23%. So I think we are very close to these targets. Our module today is producing around 11. Our cell plant, we have started the first 2 gigawatt, is already producing 4 megawatt per day, and it will get ramped up to 5 in next few days. Similarly, the second 2 gigawatt was commissioned in this week, and we expect that by end of the month it will reach a capacity of 5 megawatt. So I think we are doing very good. This is one of the fastest ramp up that has happened, and this is because we have an operating plant in Bangalore where we produce both cell and module, and that has helped us to achieve these levels.
Solar rooftop is also something that the company has a big market share, 13% right now. What's your outlook? How do you expect your order book to grow in this segment specifically?
So we are the biggest in the rooftop solar. We have more than 600 channel partners, and we had a revenue of nearly 1,700 crores last year. we expect to have a very large revenue this year and cross 10,000 crores by 2030. We are working very closely with our channel partners. The whole ecosystem of supply chain has been done. And also we are now working closely with the government, especially under the PM Surya Ghar scheme. The government has plans of doing 1 crore homes. We'll do about 30 lakh homes, especially in 4 states of Assam, Rajasthan, UP and Odisha. And we are working with all the state governments on all this.
The company also has extensive capex plans all the way till 2030. How will this capex allocation be tilted towards? And in terms of funding, do we expect debt levels to stay around the same range, or can we see an uptick going forward?
So we'll have about 25,000 of capex every year. We expect 50% will be towards renewable and balance between transmission, distribution and existing generation, especially in our hydro and pumped hydro projects. We expect that over a period of time we'll have an increase in debt, but all the financial metrics will be very good, and we will be able to cater to it through a large amount of internal accruals that will happen.
Lastly, the question is on hydropower. You even have projects starting in Bhutan. Could you give us more details on what projects you expect to be started and how the hydropower segment of Tata Power will grow going forward?
So we first of all, the pumped hydro project will start by January. This is 1,000 megawatt in Lonavala, Bhipuri. The second 1,800 megawatt pumped hydro should start mid of next year. That's in Shirota. The Bhutan project, the 600 megawatt Dorjiling project, again already work has started, and the tunnel diversion work has started in the month of October. And we expect that the full-fledged work will start in next 2-3 months. Similarly, there is a Dorjiling project of 1125. We are looking to speed up work on that also. Hopefully by next year we'll be able to start. So these are some of the hydro projects. There are of course in pipeline many more projects, and we'll definitely look at executing.
Thank you so much, sir.
Right, that's the management of Tata Power telling us about the improving fundamentals and very ambitious capex plans, especially when it comes to the renewable space. But that is all that we have in terms of the time for this edition of KYC. Lots more lined up on the other side. Stay tuned to NDTV Profit.